Hi, welcome to my next edition of War in the Markets, episode 7. Clearly, another bad day at the markets. We saw that FIS selling continued. They had sold about 8,000 crores today, and DIS did buy 7,000 crores, but it was very polarized. FIS was selling not only the oil related sectors, but they were also selling broad India, and the short positions are rising. So, Nifty futures short, they have sold heavily, and specific stocks. The Nifty Bank Index also they sold, and they've also probably taken shorts on specific stocks. So as a result of this, we saw that the worst performing sector today was the PSU banking sector, and the private banks also fell in terms, and then auto and manufacturing. DI buying was probably came into the safer zone because they are more worried about a deeper fall. So they are not yet buying the banks which are falling heavily, but they're buying IT and pharma, which is where we saw very mild falls or slight greens. So from that point of view, where is the key? The key today, as you know, is that the volatility index stays around 23.3 because oil price overnight. When I last spoke to you, it was at 93. Then we moved to 99. Now today it moved right to 115, and then the G7 countries saying they will release strategic reserves to control oil price brought it down to 105. But even at 105, it's a huge negative for India because sustained level at this prices means that it will affect the current account deficit, the fiscal deficit the government decides to absorb by reduction of excise duties, oil refining companies' margins, if the government decides to ask them to pick up the hit, and the GDP growth will come down by 30 to 50 basis points if this lasts for more than a month at these $100 plus levels. On top of it, for India, the worst situation is that because this flow of money is out not just of India but of emerging markets back into the dollar, especially into US treasuries, we are seeing not only treasury yields rise there, but the dollar is strengthening. Dollar index is also at 99. So the rupee weakening. So rupee has gone past 92 to about 92.3, 92.40, and that means landed price of oil will go up even more. Now, the US has allowed India to buy oil from Russia, but it's no longer at a discount, and the transportation cost and the insurance premium both have shot up. So the landed cost of oil is going to be much worse than the $105. So FIs are actually selling India on rise types every time. DIs are buying and supporting. But even within FIs, I saw the data today, it has 20,000 crores of buying, 28,000 crores of selling, net 8,000 crores negative, which means long only FIs are still buying. DI is still buying. So as a retail investor, you should also continue your strategy of buying small amounts of the portfolio you constructed before the war started. Oil had a V-shaped rise, and now there could be a V-shaped fall if any good news comes. So bear that in mind in structuring your portfolios.